Hey everyone, welcome back to Dollar Digest. This is my student led project where I break down the world's biggest economic stories simply, clearly, and in just a few minutes. Every week I share my insights in my newsletter, and every month I bring you this quick video recap of the top 5 global stories you might have missed. Let's dive into what happened in October. October 2025 was full of twists and turns in the global economy. Rising debt, bold investments, political roadblocks, and trade tensions. Whether you're an investor, student, or just curious about what shapes your wallet, these 5 stories are worth your attention. Let's unpack them, make sense of the numbers, and see why they matter to all of us in just under 6 minutes. And don't worry, I promise to keep it less boring than a finance textbook. So, first up, the International Monetary Fund has issued a stark warning. Global government debt is expected to surpass 100% of world GDP by 2029. To put this in perspective, this is higher than the combined annual output of every country in the world. Essentially, governments will collectively owe more than the total value of goods and services produced in a year. Most of this surge comes from emergency spending during the pandemic, low interest borrowing, and now rising interest rates that make debt servicing more expensive. Countries like Japan, Italy, and the US are already juggling high debt loads. The IMF warns that high debt limits flexibility. Think of it like trying to stretch an already tight rubber band. One wrong move and it snaps. For everyday people, this matters because high debt can lead to slower growth, higher taxes, or reduced public spending on schools, healthcare, and infrastructure. Even if it seems abstract, when debt climbs too high, your mortgage rates, public services, and job market can all be affected. And if governments don't act now, the bill will only get bigger for them and indirectly for all of us. Amid global slowdown fears, India is punching above its weight. The IMF has raised India's growth forecast for FY 25-26 to 6.6%, higher than many major economies. This upward revision reflects strong domestic consumption. People are buying cars, phones, and even investing in small businesses, combined with increased private investment and resilient industrial output. Even challenges like rising US tariffs haven't slowed India much, which suggests the economy is becoming more self reliant. Think of it as a runner speeding ahead in a crowded marathon while others are tripping over potholes. Why does this matter beyond bragging rights? Strong growth attracts foreign investment, creates jobs, and helps governments fund infrastructure and social programs. In simple terms, a growing economy in India can help keep global tech companies, automakers, and exporters happy, and that ripple effect reaches all of us indirectly through global trade and investments. And yes, it's also a boost to national pride because for once, India is setting a global pace rather than following it. In the US, political drama hit the economy again. A government shutdown delayed the release of crucial economic data like inflation numbers and employment statistics, the very metrics that guide the Federal Reserve's interest rate decisions. Imagine trying to drive your car with your dashboard screens off. You can guess your speed, but not with certainty, and a wrong guess can be costly. That's what investors and policymakers face when critical data is delayed. Economists estimate that the shutdown could shave zero point 0.1 to zero point 0.2 percentage points of annualized GDP growth per week, which might sound small, but over months it adds up. This isn't just politics for politics' sake. Delayed data increases uncertainty, affecting stock market prices, business investment, and even job creation. Companies hesitate to hire, investors hesitate to invest, and the average consumer may feel higher prices or slow wage growth. Essentially, a political standoff in Washington can have a direct ripple effect on people sitting thousands of miles away, proving that in today's interconnected world, government timing matters. Hyundai is betting big on India. The South Korean automaker announced a $5 billion investment by 2030 to expand manufacturing, develop new models, and localize R&D. This includes 26 new or refreshed models covering hybrids and electric vehicles, a clear signal that India is not just a market but a strategic hub. For India, this is significant. The investment creates thousands of jobs, strengthens local supply chains, and helps establish India as a regional automotive leader. For Hyundai, it's like planting a flag in a rapidly growing playground because EVs and hybrid cars are expected to dominate the next decade. Fun fact, India is already one of the largest automotive markets in the world. Hyundai's move ensures that it stays competitive against rivals like Tata Motors, Mahindra, and Kia. Plus, every new factory and R&D facility helps India develop engineering talent, which can have long-term benefits for innovation and exports. Google just raised the stakes even higher. The company announced a $15 billion investment over 5 years to build an AI and cloud computing hub in India, including a massive data center campus in Vishakhapatnam. This isn't just a tech park, it's a plan to transform India into a global AI powerhouse. The investment includes green energy infrastructure, high capacity fiber optic networks, and cutting edge AI research facilities. Partnering with the Adani Group, Google aims to create an ecosystem that could rival Silicon Valley, but with Indian talent leading the charge. What is the broader implication? More jobs in tech, better digital infrastructure, and positioning India as a critical player in the global AI race. Let me give you a fun anecdote. Google CEO mentioned that this is their largest overseas investment ever, meaning India is officially a top tier player on the tech map, not just as a consumer, but as a creator of future technologies. October's economic highlights show a world in motion: high debt, strong growth in India, political uncertainties in the US, and mega investments shaping the future of tech and manufacturing. The economy affects us all, sometimes in ways we don't immediately notice. For more insights, deeper analysis, and weekly updates, subscribe to Dollar Digest and check out the newsletter. Stay informed, stay ahead.